Is the 2023 housing market crash going to be worse than the one in 2008? We're going to find out in this video and, on top of that, we'll outline the cities where home prices will drop the greatest. Because, as prospective homeowners or real estate investors, you all need to be aware that the US housing market is still experiencing its biggest bubble ever. The average home value in America is $356,000. The median household makes $74,000, which translates to a price-to-income ratio of 4.8, which is even higher than the peak in 2007, just before the worst housing crash ever. In order for this price-to-income ratio to return to the long-term average in America, prices must ultimately decline by 30% in 2023 and 2024. Just to put it in perspective, how bad was the 2008 crash? From its pre-crisis peak in Q2 2007, the U.S. household net worth decreased by over $13 trillion, or 20%, until recovering in Q4 2012. By early 2009, U.S. house values had dropped by an average of roughly 30%, and the stock market had dropped by around 50%. Before the crisis, lenders' actions underwent a significant adjustment. Lenders increasingly extended credit to higher-risk customers, such as unauthorized immigrants. So, the provided loan options were progressively riskier. For first-time home purchasers in 2005, the median down payment was 2%, and 43% of those buyers made no down payment at all. The issue was that, although housing costs were skyrocketing, average household incomes remained stagnant. The median household income remained constant between 2000 and 2007. As a result, the situation became increasingly precarious as prices increased. The people simply couldn't afford it, regardless of how loose lending standards were or how many novel mortgage packages were developed to force them into homes they couldn't possibly pay. By the end of 2006, the average family's housing expense was almost 4 times what it was earning. In the past, it happened 2 to 3 times. And something that had nearly never been seen before, was picked up by mortgage lenders. People would close on a home, sign the mortgage documents, and then miss their very first payment. They weren't facing a job loss or a medical emergency, they were already in over their heads. That was likely the time when one of the biggest speculative bubbles in American history burst. Until now. Now, back to 2023. Considering that the house prices should drop 30% to be considered normal, means that the upcoming crash we are facing could be comparable to the crash back in 2008. Nevertheless, regional variations exist in the housing outlook. Regional housing markets in 322 cities were examined. 49 property markets are expected to have home price declines of over 15%, according to experts. Additionally, they forecast a 24.1% decline in Morristown, Tennessee, and a 23.3% decline in Muskegon, Michigan, in terms of real estate prices. From peak to trough, housing markets like New York and Chicago will experience declines of 6.3% and 4.2%. They anticipate that the most drastic drops in home prices will occur in highly inflated property cities including Boise, Flagstaff, Seattle, and San Francisco. The current downward trend in housing prices will not change as long as there are active homebuyers and a dearth of available inventory. The real estate market is gradually moving away from sellers toward more balanced conditions in the second half of 2022, as more homes are coming on the market. September saw a drop in existing home sales, the 7th straight month of declines. Although the market is expected to slow down, prices for homes won't necessarily plunge dramatically. Despite fewer sales, there are still several bids, and more than a quarter of homes sell above list price because there is a shortage of available properties. With inventory levels 4 times larger than they are now, the prior significant market downturn from 2008 to 2010 stands in strong contrast to the current shortage. Experts believe that, despite a slow market and falling buyer interest, there will still be more demand for homes than there is room for. The desire for housing should, however, decline as the quantity of homes available rises due to concerns about affordability. As a result, the housing market is probably not about to burst like it did back in 2008. When mortgage rates rise and inventory rises, home prices will decline, but considering the experts, are unlikely to drop like they did back in 2008.